Welcome, everyone. Retirement is the next great phase of life, the start of a new adventure full of promise. Most people spend their entire adult lives diligently working and saving for this moment. I'm sure many have already imagined what their future might look like. But whatever the goal, one thing is very apparent: retirement has changed, and so has the role of preparing for it. A greater responsibility has been placed on Americans to save for their future, and with this greater responsibility may come some uncertainty. It's natural to be concerned about saving enough for retirement, but it's important to have an income strategy for retirement too. Today I'm going to introduce an interesting fixed index annuity and income rider combination that can help address both of these concerns. Thanks for joining me today. Before I end my presentation today, it is important to note that any financial product is only as strong as the company behind it. And as a leading provider of retirement solutions, Allianz Life Insurance Company of North America has the strength and stability to remain true to its promises. Allianz serves over 3.7 million contract owners of products that include fixed and variable annuities and universal life insurance. Founded in 1896, Allianz Life provides innovative financial solutions for wealth accumulation, predictable retirement income, and protection of assets. High ratings from independent rating agencies reflect Allianz's stability, integrity, and strong balance sheet. For a history of Allianz financial ratings, visit www.allianzlife.com. The AM Best rating of A+, Superior, is the second highest of 16 possible ratings and was affirmed September 2020. The Standard & Poor's rating of AA, Very Strong, is the third highest of 21 possible ratings and was affirmed August 2020. The Moody's rating of A1 is the fifth highest of 21 possible ratings and was affirmed October 2020. In the end, contract owners want a company that can design reliable products and provide the stability behind them to last throughout their retirement lifetime. Allianz Life Insurance Company of North America is part of a global financial powerhouse. Our parent company, Allianz SE, serves over 85 million customers in 70 countries and is the world's the 46th largest company, the 5th largest asset manager, the 3rd largest company in the diversified insurance industry based on assets, the 4th largest company in the diversified insurance industry based on market value. Allianz in North America includes Allianz Global Investors and PIMCO, Pacific Investment Management Company LLC. PIMCO is one of the world's leading fixed income managers. Here is a historical look at the top 5 companies in terms of fixed indexed annuity sales, 1997 to 2007. Allianz becomes the FIA leader in 2000. Here is a historical look at the top S companies in terms of fixed indexed annuity sales, 2008 to 2019. Allianz was the FIA leader 19 of the last 20 years, while some other companies came and went.
Today's presentation will cover the following topics. 1. Allianz Benefit Control Overview. 2. Key benefits while saving for retirement. Key benefits while taking income through guaranteed lifetime withdrawals. 3. Key benefits while taking income through guaranteed lifetime withdrawals. 4. Your important questions answered. Let's begin by looking at the benefits an Allianz Benefit Control fixed indexed annuity can offer. As you prepare for retirement, you want control over how you create sources of guaranteed income. The Allianz Benefit Control Annuity or ABC Annuity is an FIA that allows you to activate lifetime withdrawals anytime through its Lifetime Withdrawal Benefit Rider, included with no additional fee. The ABC Annuity offers you a choice between different interest bonus options, which means every time interest is earned, it will be credited with an interest bonus. And with the cost of living in retirement potentially increasing due to such things as healthcare, inflation and taxes, the ABC annuity offers the potential for increasing income based on earned interest as well as the income multiplier benefit, which can double the client's withdrawal if they become ill. Qualifications apply. Fixed indexed annuities, or FIAs, can offer many benefits to you, such as accumulation potential. This is the potential to earn interest based on changes in an external index. Allianz FIAs give you a choice of several indexes, some exclusive index options as well as the fixed interest option. Tax-deferred growth. You will not pay taxes on the interest the annuity earns until you take a withdrawal. This will help compound earned interest, so the money in the contract can accumulate faster. Level of protection. The contract can earn interest based on an external index, but you are not actually buying any securities or shares of an index. This means the money in the FIA, the principal, is not at risk due to market losses. However, the principal may decrease due to charges like rider charges. Retirement income. Annuities are designed to provide a reliable stream of retirement income, either for a set period or for as long as you live. Select Allianz FIAs even offer the potential for increasing income and other riders, either built in or available at an additional cost, to help you address specific needs. FIAs also provide death benefits for your loved ones, which can be paid out in a variety of ways. Let's cover some product details. The issue ages for ABC are 0 to 80 years old. The minimum premium to start the contract is $20,000 qualified or non-qualified. 10% of the total premium paid annually is allowed in a free withdrawal. The free withdrawal is available after the contract anniversary following the most recent premium payment. You are allowed to add premium for the first 18 months. Select index allocations will have an allocation charge. If the contract owner's marital status changes, the new eligible person can be changed prior to income election. The protected income value, the value payments will be based on, is credited with a premium bonus after the contract is issued. For current rates, please visit our rate page after logging in to the AllianzLife.com website. If withdrawals exceed the free withdrawal provision, they will be subject to withdrawal charge and market value adjustment during the withdrawal charge period. The withdrawal charge period is 10 years. The ABC has a built-in guaranteed lifetime withdrawal benefit, which is included at no additional cost. The client will have the option of two different PIV interest bonus options. The balanced or accelerated interest bonus. For current rates, please see the rate page at AllianzLife.com. The death benefit, during the accumulation phase, will be the greatest of the accumulation value, guaranteed minimum value or cumulative withdrawal amount, if taken in a lump sum, or the lesser of the protected income value at death, or 250% of the accumulation value if paid out over a minimum of 5 years. We'll look at an example of this at the end of the presentation. Let's begin by looking at the benefits an Allianz Benefit Control fixed indexed annuity can offer. There are two bonuses to help grow the protected income value. A premium bonus which will be applied immediately to the PIV and to all premium paid into the contract, and the interest rate bonus which will be applied at the end of each crediting period. Also, as you will see, the PIV bonus you choose will also determine the accumulation value interest factor for your contract as well. More to come on that. The protected income value is the value in the contract on which lifetime withdrawals will be based. This value is not available as a lump sum. Beneficiaries have access to this value if it's paid as a death benefit over a minimum 5 years. Now let's talk about the first of two bonuses available with the Allianz Benefit Control annuity. First, to help accumulate for retirement, all premiums paid in the first 18 months will receive an 25% premium bonus credited to the protected income value. In this example, we are assuming that the contract owner made a total of 3 premium payments in the first 18 months. Each crediting period, the contract owner will have the option to choose between the balanced or accelerated interest bonus option. The accelerated PIV interest bonus option credits 250% of earned interest to the PIV and 50% to the avenue. The client can choose the bonus option at the time of application and can change it on any subsequent contract anniversary. However, 100% has to be allocated to either the balanced or accelerated option per crediting period. The balanced PIV interest bonus option credits 150% of earned interest to the PIV and 100% of the credit to the avenue. Rates are set at issue and guaranteed for the life of the contract. Please note, only the balanced PIV interest bonus option is available once income withdrawals have started. Next, we'll look at an example of the bonus at work. In this hypothetical example, the contract owner has started the contract with $100,000 and has allocated 100% to the balanced PIV interest bonus option. the protected income value will receive an 25% bonus, making it $125,000 immediately. At the end of the first crediting period, the index interest is 4%. The AV will receive 100% of the 4% indexed interest, and the PIV will receive 150% of the indexed interest, equaling 6%. The total values at the end of the crediting period will equal $103,050 in the AV and $132,500 in the PIV. In our accelerated option, the AV and PIV start off the same as the balanced. The indexed interest is 4% at the end of the crediting period. However, with the accelerated option, the AV interest factor is 50%, and the PIV interest bonus is 250%. The indexed credit will then equal 2% in the AV and 10% in the PIV. The new values will equal $101,050 and $137,500. Let's look at a case study of a hypothetical IRA versus the Allianz Benefit Control (ABC) annuity. In this example, I'll show that the ABC has the opportunity to help lessen the stress on your portfolio, requiring only 1.50% return versus 8.5% return to generate the same income. Note that the FIA earning potential is limited by caps, spreads, and par rates. In this case study, a 65-year-old needs to generate $6,000 of annual income per year starting 5 years from now. They start with $100,000. For the ABC annuity, they receive a premium bonus of $25,000. The next item we're going to look at is the return that needs to be generated by the investment in order to set up the $6,000 income. For an IRA, an 8.50% annual return would be needed. With the ABC annuity, the indexes being tracked would need a 1.50% annual return after any caps, spreads, and par rates are applied. With the 250% accelerated PIV interest bonus, this return becomes 3.75%. After the 5-year wait, the income value in the IRA would be $150,366. The ABC annuity protected income value would be $150,262. A typical withdrawal amount for an IRA is 4.00%. With the ABC annuity, the lifetime withdrawal amount at age 70 after the 5-year wait is 4.50%. These factors bring our total income generated in the IRA to $6,015. The total income generated in the ABC annuity is $6,762. Remember that to generate similar income amounts, an IRA would need an average 8.50% return from its investments, while the ABC annuity can do it with a 1.50% return. Keep in mind that the assets within the IRA may provide more liquidity for emergency needs, whereas the annuity values will be subject to surrender and MVA charges. Next, let's review the Allianz Benefit Control while taking lifetime withdrawals. When clients start lifetime withdrawals, there is the opportunity for the payment to increase every year or crediting period that interest is earned. And once that payment goes up, the increase is guaranteed. As you can see, in this hypothetical example, the payment increases in years 5, 6, 9 and 10. In this hypothetical example illustrating the balanced option, which is the only option during income, you see the starting withdrawal is $10,000. Remember, you can turn income on any month. At the end of year 6, the indexed interest is equal to 3%, however your withdrawal will increase by 4.5% with the 150% interest bonus applied. Year 7 was a down year, so the client's withdrawal stays the same. At the end of year 8 the indexed interest was 5%, so your withdrawal increased by 7.5%. And year 9, the interest was 4%, when multiplied by 150%, increased it to 6%. As you can see, the withdrawals always have the potential to increase but will never decrease due to market volatility. The Allianz Income Multiplier benefit is the second way to help alleviate some of the rising cost during retirement. This benefit allows clients to double their payment by qualifying one of two ways. If the contract owner is confined to a qualified nursing home, long-term care facility, hospital or assisted living facility for at least 90 days in a consecutive 120 days, after the first year, or if the client is unable to perform 2 of 6 activities of daily living for 90 consecutive days, they would qualify. In our hypothetical example, the withdrawal prior to the illness is $20,000. After meeting the criteria, the payment doubles to $40,000, and as you can see, it still has the opportunity to increase due to indexed interest being credited to the contract. This benefit continues until either the client recovers or the accumulation value reaches zero, upon which the payments revert back to the standard payout. Please note, a physician must certify the covered person is unable to perform, without direct physical assistance of another person, at least 2 of 6 activities of daily living for at least 90 continuous days. In this section, we'll discuss some important details and answer important questions. This slide puts all the choices together. Allianz Benefit Control offers 9 different indexed interest options and 4 different crediting methods, plus the fixed interest allocation. All totaled, there are 18 different indexed interest allocations, plus the fixed interest allocation, from which to choose. And as we said in the previous slide, these allocations can be changed each contract year, or crediting period for 2-year point-to-point allocations, as long as the request for change is received within 21 days after the contract owner's contract anniversary, or crediting period. And if the request is received more than 21 days after their contract anniversary or 2-year anniversary, when choosing the 2-year point-to-point, it won't take effect until the following contract year or 2-year crediting period. The index lock feature gives you the flexibility to track and view index values online and initiate index value locks on select indexed interest allocations anytime during the crediting period. This can help minimize the effects of midterm market volatility while also providing the opportunity for positive index credits. The index value used to determine interest credited may be higher or lower than the index value at the time of request. In this hypothetical example illustrating the balanced option, which is the only option during income, you see the starting withdrawal is $10,000. Remember, you can turn income on any month. At the end of year 6, the indexed interest is equal to 3%, however your withdrawal will increase by 4.5% with the 150% interest bonus applied. Year 7 was a down year, so the client's withdrawal stays the same. At the end of year 8 the indexed interest was 5%, so your withdrawal increased by 7.5%. And year 9, the interest was 4%, when multiplied by 150%, increased it to 6%. As you can see, the withdrawals always have the potential to increase but will never decrease due to market volatility. The second way to activate index lock is a manual index lock. If a lock has not already taken place, simply request a manual lock anytime within the crediting period. Both options make it easier for your clients to receive a positive index credit in volatile markets, and both options can easily be done within our secure website. Index lock is available on select index allocations. The allocation charge applies to certain index allocations. The annual charge can range from a minimum of 0% to a maximum of 2.50%. The allocation charge allows Allianz to better manage investment risk in extremely challenging economic environments. Including this charge can pass that value onto you through more attractive product features such as bonuses and increased withdrawal percentages. We intend to change the allocation percentage on V when one or more of these specific criteria are met. If the average of the daily 10-year U.S. Treasury rates, over a calendar year, drop below 0.50%, corporate bond downgrades are greater than 25%, investment-grade corporate bond defaults are greater than 0.5%. We also maintain the discretion to not change the allocation charge even if one of these criteria is met. The allocation charge is deducted annually from the portion of the contract's accumulation value and guaranteed minimum value allocated to the indexed allocation. It is based and calculated off the accumulation value at beginning of crediting period and deducted at the end of the crediting period after any interest is applied. The charge does not impact the contract's protected income value, which is the value on which lifetime withdrawal income is based. There are 2 options for receiving the death benefit: AV, or GMV or cumulative withdrawal amount, if greater, in a lump sum, or PIV if taken over 5 years. The PIV death benefit equals the lesser of the protected income value at death or 250%, the death benefit cap, of the accumulation value. Let's look at two different hypothetical examples. In our first example, the client passes and $100,000 is available in the accumulation value and $225,000 in the protected income value. The death benefit cap would not come into play since the PIV death benefit is less than 250% of the AV death benefit. In our second example, the AV at death is $100,000 and the PIV is $300,000. In this scenario, the 250% cap would come into play. Multiply the 250% by the 100K AV to equal the PIV death benefit of $250,000. The beneficiary can receive the $100,000 AV in a lump sum or take the $250,000 in the PIV over at least 5 years. This cap can change on new business, however, once a contract is issued, the value cannot change. If the client is admitted into an eligible nursing home, long-term care facility, or hospital and confined for at least 30 out of 35 days after the first contract year, they can take an accelerated distribution of the accumulation value as annuity payments over at least 5 years. There is no fee for this rider. The flexible withdrawal rider is an optional benefit that must be selected at issue. It allows withdrawal of up to the full contract value if the owner is confined to an eligible facility, a hospital, nursing home, or assisted living facility, for 30 out of 35 consecutive days. There is a monthly charge of 0.008333% of the accumulation value for this rider. So in summary, as we stated to begin with, the Allianz Benefit Control Annuity or ABC Annuity is an FIA that allows you to activate lifetime withdrawals anytime through its lifetime withdrawal benefit rider, included at no additional fee. To help increase the benefit base faster, the ABC Annuity offers you a choice between two different interest bonus options. Which means every time interest is earned, it will be credited with an interest bonus. And with the cost of living in retirement potentially increasing due to such things as healthcare, inflation and taxes, the ABC offers the potential for increasing income based on earned interest as well as the income multiplier benefit, which can double the client's withdrawal if they become ill. Qualifications apply. Is Allianz Benefit Control Annuity right for you? If you're looking for an annuity that can provide an opportunity for indexed interest when the index is up, and protection when the index is down, and you are looking for income payments that can increase, Allianz Benefit Control with the protected income rider may be right for you. As a financial professional, I can help you decide whether Allianz Benefit Control Fixed Index Annuity may be a good fit for your overall retirement strategy.